Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take. Your family or business can benefit in current events most of all. Thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And I'm going to remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, we are celebrating today. We celebrate every day on Ron Siegel Radio. Let's see, what do we have going on today as we scour the list of all the items that are there. National Lash Day? Arabian Horse Day. That's nice looking horses. Let's just stick with National Chocolate Mint Day. I like that one. I like eating. Now, we're not going to say Thin Mints because we could get in trouble from the Girl Scouts. Are they still called Girl Scouts, or is it just Scouts now? Or is that Boy Scouts went to Scouts? Okay, so National Chocolate Mint Day. How do you go wrong? You got chocolate, you got mint, you got everything it takes. And I also look to just take a look and see what else is going on in the world for today. Smokey Robinson's birthday. Yes, I know I'm old. Motown singer. Let's see. What else do we see on here? A cylinder phonograph from Thomas Edison got the patent today. Oh, here's a good one, Josh. Think about this one. Cracker Jacks added its first prize in their box on this date in 1913. They even have Cracker Jacks anymore? I don't know. I haven't seen them in a long, long time. And for those of you that are old, Mr. Rogers' Neighborhood made its debut in 1968 on this date. All the useless trivia that you need to know for this date and worthless completely. So let's see what the markets are doing today. We can do that. We've got the Dow Jones Industrial Average down 335 points. The NASDAQ is down 100. The S&P 500 is down 31. Oil's up another $1.65 a barrel. Ow! Not good for California. Gold is up $22.50, $49.98.99. It's called for just about $5,000 an ounce for gold. Been a little volatile there for lately. The 10-year Treasury's flat. Mortgage bonds up just a little bit. Nothing exciting on any of those things. And let's look at gas prices. They're going up again. Not as much in the rest of the country as it does in California. So we're up, about a nickel from last week. The rest of the country, we're down 2 cents from last week in the rest of the country. So we still lead the country. And now we've got, I don't know if you saw this, they're out there looking to try and find some more taxes. Oh, wait a second. This one isn't taxes. This is confiscation. So California's latest, they want to take in and confiscate 5%. It's called a wealth tax. Now, you look at what they call the billionaires, and Bernie's here talking about it. 5%. They want to just add up everything you got, give the state 5%. Now, think about that. You know what nobody thinks about in these different areas? Do you think that some of these billionaires are sitting on 5% of their wealth in their checking account? No. They've got, stock in their company that maybe it hasn't even been, it needs to be executed. Maybe it's sitting in options that are, they don't know what they're going to be worth. You look and you see what's happened with some of these stocks in the last month. I mean, look at what day do you do these things on? I'm looking, and I know just one of them that I've watched that has really been going the wrong way for quite some time now. But Microsoft, okay, so if you did a confiscation on the people that own billions of dollars worth of Microsoft, you look at it and you say, okay, well, the stock is down about 25%. Yeah, maybe 20% in the last month. So how do you determine? I'm looking at it right now, down 13.23% month over month. So it was up way into the 400-500 range, and now it's under 400. So when you're having to sell off stock just to get there, does it make any sense? The 52-week high of Microsoft is $555 a share. Today it's $399 a share. So it's given up. That's 25% down from its high. So this tax or this confiscation basically would say, something, if you're one of the big holders of Microsoft, you got to go sell your stock so that you can pay this new confiscation tax. And if the stock stays down or goes down, sorry, you're not going to get your money back. Doesn't make any sense to me. Now, obviously, I am not one of those billionaires, but if they can do that to billionaires, would it surprise you to think that who are they going to go after next? And yes, they will go after somebody, because there's always someone in the crosshairs until you run out of other people's money. That's why you see so many of the billionaires leaving the state of California. Now, what else does that do? Well, who spends a lot of money? Well, people with a lot of money spend a lot of money. So if they're leaving the state, and what is that? How's that defined? 181 days outside the state. Talk about sales tax, going to restaurants, dry cleaning, groceries, all your cost of living items. Well, those things are going to another state. And why do you think Florida is flourishing? Right? It's just they're saying we can cut our spending. We don't have to increase the taxing on everybody. But when you got a state that's a one-party system, look at New York City. Mondami doesn't really have to go to the people to put a 9% increase on property taxes. But do you think it's going to stop right there? No, what's going to end up happening when these things happen, like in New York, well, the landlords are going to say, we're not fixing up these properties because we gave the money to the state. Let the state do it. No, the state's not going to do it just because that's not what the state does. So the people suffer because of these dumb policies that have never worked anywhere in the world, and they're not going to work in the United States either. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. We're going to do a VA home loan workshop. We're going to talk about that today, and there's a lot of mistakes out there in the VA world. We try to cover that. What your lender doesn't know about VA loans, it's costing you money. The price you set can make or break the sale of your real estate. Should I accept a free credit lock? Is it really free? We'll talk about that as well. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They only tell us the number you need to put in your mortgage calculator to determine the principal and interest payment. If you don't have a mortgage calculator, they are free for you. rsrlinks.com/calculators, rsrlinks.com/calculators. Whole suite of calculators right there for you. What did rates do yesterday? They were mixed. Conventional 30-year fix, that was up 6.006. Jumbo 30-year fix down 6.198. FHA 30-year fix 5.961, that was up. VA 30-year fix 5.653, that was up. And the USDA 30-year fix 5.848, that was down. If you want our thoughts about the market each and every business day morning, as early as the data allows, we put that in the Ron Siegel Radio community, rsrlinks.com/HBOD, rsrlinks.com/HBOD for your household board of directors. That's where you get the information. What are the markets doing today? Not the information necessarily or exclusively that you're going to find in the google.com, but here's the details. So you look at this, you can find the S&P is down 27 right now. The mortgage bond is up a half a basis point, 4.082. And the mortgage bond, I'm sorry, that was the 10-year treasury. The mortgage bond is up 4 basis points. That means rates are down just a very little bit. But why is all that happening? That's what we're really looking at. That's what we're studying for you. That's why you tune into Ron Siegel Radio. That's why you subscribe to our channels and give us some love on there. Minutes from the January 28th Fed meeting were released yesterday afternoon, showing that Fed members have polar opposite viewpoints. Some Fed members felt that they should pause because they believe the Fed funds rate to be in the range of neutral. The doves like Mirren and Waller felt the Fed was still meaningfully restrictive and that the labor market is still very weak. The hawks believe labor was stabilizing, that the Fed should adjust its statement to say not only that it could cut rates if inflation falls, but also that it should consider hiking if inflation fails to decline. Some of the Fed members seem very out of touch. The labor market data has been extremely weak, and the latest BLS jobs report showed that 2025 was even weaker than previously thought, showing little to no growth for the entire year. The market did not believe the January jobs report, as those numbers are expected to be revised much lower. On inflation, the minutes showed that many Fed members feel inflation should be coming down as the tariff impact fades, the disinflation in housing continues, productivity increases, and deregulation helps bring prices down. While the Fed is clearly divided, Kevin Warsh will be the new Fed chair mid-May, and he'll hold a lot of sway. There are talks that he is more hawkish than some of the other candidates, but he has the ability to look forward and through things like lagging inflation and the jobs number. We want an appropriately hawkish Fed chair. We wish Powell was more hawkish in 2022 when inflation was raging and he was looking backwards, complicit in the 40-plus year high in inflation. We feel that Warsh will cut rates a few times this year, as right now the Fed is restrictive. Inflation is coming down and the labor market is weak. It's worth noting that these minutes were from 3 weeks ago before the latest CPI report showed 2.5% year-over-year core inflation. Now, one of the things that I debate with folks, and many don't realize, is all of the staff throughout the entire Federal Reserve, they all report to the chairman of the Federal Reserve. They do not report to the Fed presidents, the Fed governors. In fact, those folks even have trouble getting funding for an assistant. They all report to the Fed chair. So if the Fed chair is telling them, hey, go look at what the current numbers are in inflation, as opposed to looking backwards only, let's look at forecasting where inflation should be instead of where it's been. And let's get some data there. Let's look at the real numbers that are dealing with the labor market instead of the hogwash that comes out of the Bureau of Labor Statistics that we know is wrong every single time. And 11 out of 12 months in 2025, they had to be adjusted lower. Now, I can understand if you're wrong, and sometimes you're wrong higher, sometimes you're wrong lower. Okay, I get it. When you're wrong 11 out of 12 statistically, you got to wonder what's going on behind the scenes and where are they getting their data from that's consistently inaccurate. So Warsh, being that he's going to be controlling all the staff, maybe he'll go in there and say, you know something, let's look at some of these numbers, and maybe we need to look at different data until the Bureau of Labor Statistics can get their act together. I don't know whether he'll do that. I'm just saying it's within his control. Pending home sales measures signed contracts on existing homes were released for January. The report was a miss, showing that sales fell 0.8% month over month, which was weaker than the 2% gain expected. Weather was the main story here. The Northeast and South saw declines where the inclement weather had a clear impact. And we've got the regional breakdown for you. The Northeast was down 6%. The South was down 5%. The Midwest was up 5%, and the West was up 4%. So we expect these figures to rebound, especially in areas like the Northeast, where there's been a lot of strength. The chief economist from the National Association of Realtors, NAR, Lawrence Yun, echoed some thoughts that we've been sharing for a while now. Yun said that with mortgage rates near 6%, there are 5.5 million additional households that could qualify to purchase a home this year compared to last. He explained that most don't act immediately, but he expects that 10% will enter the market, which would mean a potential 550,000 new home buyers this year. He thinks that the additional buyers becoming active could push home prices higher. I agree and feel there is an opportunity in housing right now. Builders have pulled back and will not be able to respond immediately to more demand, pushing values higher. Cotality released their single-family rent index, showing that new rents fell 0.7% in December. Year over year, they're up only 1.2%. Multifamily rents are even weaker and are down year over year. The continued disinflation in rents will help overall inflation figures moderate this year, as we have been seeing. Initial jobless claims measures individuals filing for unemployment benefits for the very first time fell 23,000 to 206,000. We expected this figure to be lower, as many likely took a long weekend around Valentine's Day and President's Day. And we know that claims figures are always lower around holidays. This should bounce back a bit in the coming weeks. Continuing claims of those who continue to receive benefits after their initial claim were not impacted by the holiday, as it looks back 2 weeks. They rose 17,000 to 1.87 million, climbing back towards the 1.9 million level. Even with all the expirations of benefits, this underscores the theme that there is no hiring going on and people are remaining on benefits for longer. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. Let's see. I think let's do a Your Credit Matters segment. Your Credit Matters segment today brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. Someone just offered you a free credit lock. Sounds like a great deal, right? But before you click accept, there are a few things you really need to know. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Today we're talking about credit locks, what they are not, and why understanding your credit picture matters A whole lot more than most people realize. So let's start with the basics. Your credit report is essentially a financial snapshot of your life. It shows your accounts, your payment history, your loans. And because that information is so valuable, the three major credit bureaus, Equifax, Experian, and TransUnion, all offer what they call a credit lock. The idea is simple. If someone tries to open a new account in your name, the lock stops them cold. That sounds great. And honestly, for some people, it is a good tool. But here's what the fine print doesn't always spell out. A credit lock only works at the bureau where you placed it. One lock does not cover all three. So if you lock your Equifax file, but not your TransUnion or Experian, you're still exposed on two fronts. To get full protection, you need to lock all three separately. Now, about the word free. Equifax has a product called Lock and Alert, and they say it's free for life. TransUnion offers a lock through their True Identity program, but they may charge a subscription fee to keep it active over time. And Experian, their credit lock is bundled into a package that runs about $24.99 a month. So free is a word worth reading carefully. There's also this. The bureaus themselves acknowledge in their service agreements that they don't guarantee error-free service. So the lock can help, but it's not a perfect solution. So what does this mean for you? If you're in the middle of buying a home, refinancing, or applying for any kind of credit, a credit lock can actually slow things down. Lenders need to pull your credit report. If it's locked, that pull gets blocked. You'll need to temporarily lift the lock, and depending on which bureau and which service, that could take some time or cost you something. This is why I always tell people, before you make any move with your credit, know what you have, know your score, know what's on your report, and know how it affects your borrowing power. I had a client not long ago, I'll keep the details generic, but they had locked their credit after seeing something suspicious. Smart move, but when they came to me ready to buy a home, we had to work through lifting all three locks before we could even get started. It added time they weren't expecting, no crisis, but it was a delay that could have been avoided with a little planning. Here's what I'd recommend. Yes, protect your credit, absolutely. Monitor your reports regularly. Sign up for fraud alerts through your bank or directly with the bureaus. Use strong passwords. Review your bank and credit card statements consistently. These habits matter. But also know that your credit is a living, breathing part of your financial picture. It's not something you lock away and forget about. It needs attention, strategy, and an occasional check-in to make sure it's working for you, not against you. If you want to know exactly where you stand right now, there are two resources I want you to have. The first is rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. This is where you start getting your financial house in order, your budget, your credit, your mortgage readiness, all in one place. The second, rsrlinks.com/Sora. rsrlinks.com/Sora, S-O-R-A. That's where you can do a soft credit pull to see your liability picture without it affecting your score. It's a no pressure look at where you stand today. Both links are easy to remember, rsrlinks.com/keysteps and rsrlinks.com/Sora, because at the end of the day, protecting your credit is only half the job. The other half is knowing how to use it strategically, and that's where we come in. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Your Credit Matters segment, brought to you by rsrlinks.com/debt-free, rsrlinks.com/debt-free. When we come back, what your lender doesn't know about VA loans is costing you. The price you can make or the price you set on selling your house can make or break your sale. And should I accept that? Well, we already did accept the free lock. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. I'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the first Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. And I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. So we got a workshop for you today. Workshop being brought to you by rsrlinks.com/VA loan, rsrlinks.com/VA loan. That's our workshop for today. If you serve this country, you earned a benefit that most people, including a lot of loan officers, don't fully understand. And because of that, veterans are getting told no when the answer should be yes. Today, we're going to walk through what the VA home loan really looks like, how it works, and why strategy matters more than any single number on your credit report. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. I've been doing this a long time, and I can tell you without hesitation, the VA home loan is one of the most powerful wealth-building tools available to American families. The problem is most veterans never get the full picture. So today, we're going to change that. So the VA is not like other loans. Let's start with something fundamental. Most loan programs are built around one primary question. Does your debt-to-income ratio fit inside our box? That's conventional thinking. That's the FHA approach. That's what most lenders default to. The VA looks at your situation differently. Yes, they look at your debt-to-income ratio, but what the VA really leans on is something called residual income. Residual income is the money left over in your household after every single monthly obligation is paid. Your mortgage, your car payment, your credit cards, your child care expenses, all of it. What's left? That's what the VA wants to see. Why does that matter? Because a family with 2 kids living in the Midwest needs to be able to put food on the table, pay for gas, handle an unexpected car repair. The VA built in a floor, a minimum amount of discretionary income to make sure home ownership is truly sustainable for the veteran family and not just technically achievable on paper. That distinction, sustainable versus technically achievable, is exactly the difference between eligibility and suitability. And it's the difference between a loan that works and one that creates a financial hardship 3 years down the road. The guidelines are more flexible than you think. Here's a lot of where veterans get shortchanged. They walked into a lender's office, their situation is a little complicated, and the loan officer, who may not know VA guidelines the way they should, looks at the surface of the file and says, no. Let me tell you about a veteran I worked with. He had late payments on his credit report, and another lender turned him away. When we sat down and looked at his story, we found out those late payments all happened in the same month while he was traveling, traced back to an identity theft situation. He had documentation. He had a letter from his bank. He hadn't missed a payment before or since. We told the story. We documented it thoroughly, and he became a homeowner. That's what I mean when I say strategy beats rate always. The VA guideline allows for what are called extenuating circumstances. Life happens, medical situations, identity theft, deployments that disrupt household finances. The VA understands that because they built this program for people who serve, and service is not always a straight, predictable road. Now, does that mean every lender will work through those complexities with you? No. Some lenders have their own internal overlays, their own additional requirements laid on top of VA guidelines. That's legal and that's common, but it means finding the right partner matters enormously. Occupancy, active duty, and family situations. Let's talk about something that catches a lot of active duty families off guard. The occupancy rule. Most loan programs expect you to move into the home within 60 days of closing. For a conventional civilian family, that's usually fine. But the military lifestyle doesn't work that way, and the VA knows it. The VA allows up to 12 months for a veteran or active duty member to occupy the home. And here's what's even more important. A spouse or dependent child can satisfy that occupancy requirement entirely. Think about what that means for a family. Dad gets reassigned to a base 6 hours away. Mom and the kids need to stay put until the school year ends, or maybe they're moving ahead while he finishes his duty station. These are real situations that happen constantly in military families, and the VA built flexibility into the guidelines specifically for those circumstances. I've worked with an active duty recruiter who was running a recruitment station in Ohio, but his family was buying a home in Michigan, hours away. His wife satisfied occupancy, and they're homeowners today. The point is, don't let complicated family situations stop the conversation before it starts. Bring the full picture to the table and find someone who knows how to work with it. Income more than just a paycheck. Now let's talk about income, because this is where I see a lot of veterans either get discouraged or get misguided advice. If you're active duty, your income has two major pieces: your base pay, which shows up on a W-2 and is taxable, and your allowances, housing and subsistence, whatever, which are non-taxable. Subsistence, which are non-taxable reimbursement. That distinction matters because non-taxable income can be grossed up, which means we can count more of it toward qualifying. On a $2,000 housing allowance, you have $2,000 to put towards your mortgage, every dollar of it, because you're not losing a portion to taxes. For veterans who just transitioned out of service, income documentation can get more complicated. But that doesn't mean it's impossible. If your work experience in the military is related to your civilian career, even directly, that history counts. 2 years at the same employer, not required. 2 years of work or related work history in the same field, that's the goal. And if you've had gaps, taken time off to raise kids, dealt with a medical situation, gone back to school, there are ways to document and explain those gaps within the guidelines that many loan officers don't pursue. Now, building wealth with the VA loan, here's what I really want you to take away from today. The VA home loan isn't just about buying a house. Used correctly, it's a wealth building tool. There are guidelines that allow a veteran to convert a primary residence into a rental property and use that rental to offset expenses when buying the next home. There are guidelines around multi-unit properties that allow an active duty member to purchase a 2, 3, or 4 unit building, live in one unit, and use the rental income from the other units to help qualify. These are not loopholes. These are the guidelines written specifically to help veteran families build financial stability and generational wealth. But none of it works if the person sitting across the table from you doesn't know it exists. That's why I always say strategy beats rate. A slightly lower interest rate means very little if you're working with someone who doesn't know how to put the full picture of your situation together. What matters is the household, the whole financial picture, the cash flow, the long-term plan. Safety, liquidity, and return. That's the framework we use with every family we work with, and it applies just as much to a veteran buying their first home as it does to anyone else sitting at the kitchen table making one of the biggest financial decisions of their life. Bottom line, if you're a veteran, active duty service member, or you know someone who is, I want you to do two things before you talk to anyone about a home purchase or refinance. Go to rsrlinks.com/VA loan. That's rsrlinks.com/VA loan. There you'll find information about the VA benefit and how to start the process the right way so you walk into that conversation informed. Second, if you want to get your complete financial house in order, your budget, your credit, understanding you can truly afford and how a mortgage fits into your overall financial picture, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It'll walk you through what you need to have in place before you make your move. You earn this benefit. Let's make sure you use it with strategy, not with eligibility. I am Ron Siegel, Certified Liability Advisor and Certified Veteran Mortgage Advisor, helping families build wealth through strategic debt management. Thanks for listening to our VA Home Loan Workshop, brought to you by rsrvaloans.com, rsrvaloans.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, The price you set can make or break you the sale of your real estate. And more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference in the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Price you set can make or break your sale. There's one decision you're going to make when you sell that determines whether your house sells quickly or it sits, whether buyers make an offer or scroll past it, whether you walk away with the maximum return or you end up cutting the price later. And that's your asking price. The number one mistake sellers make today, trusting the wrong number. If you're thinking of moving and trying to figure out what your house may sell for, it's tempting to start with an online home value tool. They're fast, free, and easy, and you don't have to talk to anyone. But here's the problem. They don't know your house, and that can be a bigger drawback than you realize. Where online estimates fall short, online tools often lag behind the market. They look in the rearview mirror, relying on closed sales and delayed information. In that sense, they're using incomplete data. That's not a miss in how these systems are built. Some information just isn't available online. Bankrate explains, quote, while these tools can be a useful starting point, keep in mind that they typically do not provide the most accurate pricing. Algorithms can only rely on the information available. They can't account for things like a home's condition or renovations made since the last public information was updated. They can't see the unique features that make your house special, all the work you've put in to keep it in good condition, or how in demand your specific neighborhood is right now. So while they may do a good job in some cases, they can't be as accurate as a local agent who has boots on the ground day in and day out. In a market where buyers have more options, a seemingly small margin of error can cost you thousands if you price too low, or weeks of lost momentum and time if you price too high. If you want to sell for the most money in the least amount of time, you don't want a fast answer on how to price your house. You want the right one. That's why the savviest homeowners today do not rely on algorithms when it actually matters. They rely on people, specifically trusted agents. What an agent brings to the table, according to 1000 Watt, sellers overwhelmingly believe real estate agents have the best sense of a home's value, of a home's true value, far more than any automated tools. If you're watching us on RonSiegelRadio.tv or any of our socials, you are seeing a chart. When asked, who do you think has the best sense for a home's value? 56% say the real estate agent hired to sell the home. That confidence isn't accidental. As Bankrate puts it, a quote, a professional appraiser or real estate agent can visit the home in person, assess the neighborhood as a whole, as well as individual property, perform more thorough market research, and consider subjective details, unquote. And those details matter. A skilled local agent just doesn't pull reports. They know what's happening right now, what buyers are paying this month, not last month, or even last year, how your home compares to the current competition in your neighborhood, which features add value based on what buyers are willing to pay for today. How to price your house to create urgency in this market. And once an agent steps in, or they steps foot in your house, they may even find your online estimate undershot your value. So if you stick with the estimate you got online, you'd actually be leaving money on the table, and no one wants that. Bottom line, while online tools can give you a rough starting point, only a local expert can give you a price that actually works. If you want to know the right number for your house, not just the easiest one to find, let's talk. You got to give me a call at 800-306-1990, 800-306-1990. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. So Josh, let's do something a little different today, because I do want to chat a little bit to our real estate professional friends. And what I want to talk about here, and this will go for home sellers as well. So I don't even know what segment to put this under, but we'll cut it out and have it available as well. So here's what we want to talk about. If you're thinking about selling your house, now, you know that we've got the home seller's guide, right? That's an easy one. rsrlinks.com/HSG. And we've also done some work on how to maximize the sales price of your house. rsrlinks.com/salesmax. But since we did that, rsrlinks.com/salesmax, we've added some to it. So in SalesMax, we actually tell you or show you why you are going to benefit from paying somebody more, why they're going to show your property before somebody else's, because they get paid to. We show that there. We show that in SalesMax, how you can actually incentivize a buyer through special financing. And the way we put it is in the remarks of the listing agreement. The agents that we work with will put in there, seller has agreed to special financing terms through their preferred agent. Seller has agreed to special financing terms through their preferred lender, But now we've added something new. So we've set up an ad agency that goes along with Ron Siegel Radio. So our media company has its own ad agency for the meta brands. That would be Facebook, Instagram, WhatsApp, and Threads. How does the ad agency work? Well, we are able to take and put every home with a preferred realtor partner that we work with. As soon as the home is listed, we put that home on streaming TV. Yes, we've got a channel where we put it right on streaming TV, and we create a whole marketing suite of assets for the individual, for that individual property. Not in generic. It goes out and it looks at what's the closest coffee house, what's the closest Mexican restaurant, what's the closest Italian restaurant, what's the closest hamburger stand, shopping, coffee houses, the whole 9 yards. We do all that and put that into the assets. We run the property with the photos. As long as they're professional photos, we'll run those on streaming TV, but more. We then put it into our advertising system. Now, we've put together a proof of concept. Josh, this is new, so we need a link for this one. rsrlinks.com/proof-o-concept. rsrlinks.com/proof-o-concept. And there we've actually gone through and been showing the results our ads have been getting within the first 10 days of advertising on the Meta platform. Perfect. rsrlinks.com/proof-of-concept. And we show you what the ads are getting. Would you be surprised or excited to know that within 10 days, the ads get anywhere from 10,000 to 50,000 eyeballs on the ad? Sometimes the same people get the eyeballs on there more than once, but 10 to 50,000 eyeballs on the ad. And it's done within 10 days. So what do we do with this? Because we've got these platforms that we've set up, Well, we come out and we say, okay, we're going to put a just listed or coming soon ad on our platform. We're going to then put the streaming property or the streaming listing video on the platform. That's ad number 3. And agents, just for you, we're going to put a third ad on there. And the third ad is basically to say, hey, guess what Mr. and Mrs. Smith's house in your neighborhood just sold for? And we're going to only promote that to 500 or 1,000 homes surrounding the target house, the subject property that just sold. That way, maybe some of the neighbors want to sell the house. Maybe they've got a friend that wants to move in or thinking about buying or selling. Maybe they've been thinking about selling their house in Aliso Viejo and moving to Palm Desert. I don't know, but we've got it all set up through this specific process. And it's a strategic process that we do with strategic real estate partners because remember, I've been telling you for a long, long time that we've got a report card of every real estate professional that's doing business throughout the country. If they're licensed and doing business, they will show up on our report cards. So it doesn't matter what state or where this whole process works. Now, some of it your agent has to pay for. Some of it we pay for as a lending partner. That's why we put into the remarks, special financing arrangements have been approved with the seller's preferred lender. That's our team. So think about that whole concept. It's not expensive. Most of the items that you'll find under rsrlinks.com/salesmax, most of them are free. The ad platform has a little cost because Meta doesn't work for free. Facebook, Instagram, they make a lot of money. They charge a lot of money. And anybody can go in and do their ad manager. It's a pain in the neck, but they can do it. But why is ours so successful? Because we're piggybacking on a company that's got a $110 million ad spend. That's why it works so successfully. So if you want to see more about this, just give me a call at 800-306-1990, 800-306-1990. We're happy to go in there and show you. And we're also happy to give you an introduction to a realtor partner that we can work with to make sure you're getting all of these things. One of the biggest real estate trainers in the country just came out and said, the key to getting your property sold for the most money or for your client's property selling for the most money is how many eyeballs you're getting on the listing. Now, when I say we're getting 10 to 50,000, we're not advertising it into India. What we're doing is we're advertising into your local market. We're advertising it within a 15 or 20 mile radius of your property, but maybe you're in an area that has a lot of people moving from another area. Maybe you're in Tennessee and you want to attract people from California. Well, we can put the California people on there as well. Maybe you're in the Coachella Valley and we want to advertise to some of the snowbirds. We can do that. So it's all right there. And we have that available for you. All you have to do is ask us. Again, I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to our tools for helping you maximize the sales price of your house. And as always, we ask, set that first radio preset button to reach out to come back and join us every weekday morning at Ron Siegel Radio, where we only speak out items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.